Now in this video, we're going to be going through the simple yet very important dividend math, and I'm going to be sharing with you guys what a $25,000 initial investment is going to give you in cash flow on a consistent basis with some of the most popular dividend paying income oriented ETFs across the market as of right now. Now, like I said, this dividend math might be simple to some of you guys, but speaking for myself, when I was first starting off, this dividend math was a little bit confusing, but I promise you, if you stick around until the end, you're going to be able to go through any dividend paying stock and or ETF and do the exact same thing, which is going to be very, very helpful in your stock picking throughout your portfolio. So if you want to go through and see what $25,000 could return you as far as monthly cash flow goes in some of the most popular income-oriented ETFs across the market as of right now, well, make sure to stick around, drop a like down below, and let's go right into the first one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the first ETF that we're going to be seeing what a $25,000 initial investment could return us in consistent cash flow on a monthly basis is one of my favorite premium income ETFs, the JP Morgan Equity Premium Income ETF, or ticker symbol JEPI. Now, this ETF has been great for my portfolio over the long term, and I've held on to JEPI for several years now. And although JEPI does offer income potential, it also has grown at least a little bit over the past several years. Now, as far as JEPI's payouts go, this ETF doesn't pay the same exact amount every single month, so we're going to have to base this off of some sort of average. But the way that we would figure out what JEPI or any different dividend paying stock and or ETF could pay us on a monthly basis based off of a $25,000 investment. The way we would do this is very, very simple. We would take a $25,000 cash balance and divide it by the current share price of JEPI, which is around $58 per share. Now, with that $25,000, we could buy ourselves around 431 shares of JEPI as of right now, which over the past several months has paid somewhere around 38 cents on average per share per month. So then we would times this by 38 cents, which would give us around a $163 total dividend payout for a $25,000 initial investment into JEPI. But what about something a little bit higher yielding like JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, another ETF that I personally hold in my portfolio and am definitely going to buy more throughout the next year. Now, JEPQ is awesome because it has grown significantly and it also yields a little bit higher than that of JEPI. So the way that we'd figure out exactly how much cash flow we could receive from $25K into JEPQ, we would take again $25,000 divided by $57, which is more or less how much JEPQ currently costs, which would give us 438 shares of JEPQ with our $25,000 budget. Now, JEPQ has paid somewhere of around 45, maybe 47 cents on average over the past 12 or so months. So that means that with our 438 shares of JEPQ, we're looking at just over $200 consistently per month in cash flow based off the past 12 or so dividend payouts. But what about another popular covered call style ETF? We're talking about QYLD, an ETF that has decayed on the max time frame, but to be fair, over the last year, it is up around 7%. Now, even though QYLD doesn't grow as fast as maybe JEPI or JEPQ, this ETF offers around 18 cents per share per month for every single share that you own. Now, based off that simple dividend math, a $25,000 investment into QYLD, which is around $18.40 per share, could buy us 1,358 shares of QYLD. Now, because this ETF just as of recently at least has paid around 18 cents per share per month, we're talking almost $250 for a $25,000 investment into QLD. But what about another one of my favorite NASDAQ 100 high income ETFs? We're talking about the NEOS ETF QQQI, which pays a massive yield of around 14 or 15%, but also is up on the max time frame. Now, because QQQI is around $53 per share, we would once again take $25,000 divided by 53, which means we could buy ourselves around 471 shares of this ETF. Now, this ETF pays more or less 60 cents per share per month, which means that with a $25,000 initial investment, we're talking $283 per month in income, which is insane. Now we're going to go over a few more ETFs and share with you guys the dividend math of a $25,000 investment just for the fun of it. But by this point, especially those newer investors out there, if this dividend math was helpful in any way, shape, or form, go ahead and like this video and definitely subscribe to my channel for more content like this. Another one that I want to go through is one of my other favorites, SPYI, the NEOS S&P 500 high income ETF, which currently costs around $51 per share and pays out anywhere from 52, 51 cents more or less per share per month. Now, once again, we would take $25,000 and divide it by the current price per share of SPYI, which would buy us almost 288 shares of the ETF. Now, because this ETF pays around 52 cents per share per month, we're talking just over $250 for a $25,000 investment, which is insane. But what about something a little bit lower yield, something like SCHD, another very popular ETF, one of my favorite and largest holdings in my portfolio. Now this ETF obviously has a lot more growth potential, but still does pay around 3.5% more or less yield, which is not bad whatsoever. Now the way we're going to have to do this one is a little bit different. Because SCHD doesn't pay out on a monthly basis, what we're going to do is whatever we get, we're going to have to divide it by 3. So we would do a $25,000 investment into SCHD, which would give us around 911 shares of this ETF. Now because SCHD over the last several months has paid around 25 cents on average per share per quarter, we would get $227, but remember this is paid out quarterly, so we'd have to divide that by 3. So on average, a $25,000 initial investment into SCHD based off of the past few payouts would pay investors on average around $75 on average per month with a $25,000 investment. Now last but not least, I wanted to do another one just once again to sort of switch things up and once again just to really showcase the dividend math, try to get everyone up to speed. Now QDTE, the Round Till Innovation 100 0 days till expiration cover call strategy ETF, an ETF that has decayed a little bit on the max time frame but has paid investors a boatload of income every single week. Yes, you heard me right, this ETF does not pay quarterly, it does not pay monthly, it pays investors every single week, which is amazing. Now some weeks it's going to pay more or less, you can see that just as of recently in December, we have an 87-cent payout this week. The week before that it's around 16 cents, so if we were to average things out, let's just say it pays on average 37 cents per share per week. So the way we would do this one is the same difference. We would take $25,000 and divide it by the share price of QDTE, which means we could buy around 621 shares of this weekly paying ETF. Now what we would do next is multiply this by around 37.38 cents, which means that on a weekly basis, we're talking $236 or times 4, around $1,000 per month. Now again, ETFs like this one, you're going to have to be careful and really go back as far as you want, average out how much you think an ETF like this is going to be paying in the future, because of course, even if it recently paid a massive payout, then maybe a tiny one, you don't necessarily know what it's going to pay ongoingly. Now, I think it goes without saying that there's countless different ways to invest $25,000 in the market, for example. There's tons of different stocks and ETFs that either offer a ton of income potential, maybe more growth potential, or of course, a little bit of both. But I just wanted to showcase the basic dividend math, especially for newer dividend investors, so you can now go through and figure out exactly how much dividend income you can earn on a consistent basis, whether you invest in X or Y or whatever the case might be. So now that we went through just a few of the most popular income-oriented ETFs that I would almost guarantee some of you guys are already holding in your portfolios, and I showed you exactly what a $25,000 investment could potentially earn you on a consistent basis per week, per month, or per quarter. I promise by utilizing this simple dividend math, you can now go through any different stock or ETF and get an idea of what you're looking at as far as cash flow consistently. Or of course, you can build out a custom dividend tracker like the one that I have right here, and you can grab yourself a copy of this one. It's the first link in my description. But either way, I hope that this video helped you in some shape or form. And lastly, I want to hear from you guys down below. As far as an income-oriented ETF across the entire market as of right now, what's one of your favorites that you've been buying consistently? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.